MajorLeagueTrading.com is my site. These are a couple pictures of me. My name is Jack Gleason. I'm 26 years old. I'm from Chicago. I'm probably a lot younger than most of the presentators in this webinar, but don't discount me whatsoever. I was hired by a futures trading firm out of Chicago at the age of 21 years old. I taught futures and options with Thinkorswim co-founder, so obviously Thinkorswim, you guys, one of the biggest retail trading platforms. That's Tom Sosnoff on the right, and me and myself about 4 years ago. Worked with him on a show we did. I've traded for a private family office in Austin, Texas, billion-dollar family, and I've worked for a proprietary equities trading firm. Now I am the co-founder of MajorLeagueTrading.com. This is me and my friend Matt. He came in my office on the right-hand side, and on the left-hand side, what I actually have is a video I took Friday of my room. Now, my room is a live trading room, and what I would like to show you guys is, I just took a sample clip of what I do for teaching, and then we'll go into more of that here. So I'll just play this for you guys. Oops. Alright guys, I just want to explain the trade I'm in, what I'm looking for. I'm going to show you guys the internals. So we had an upside profit target here at 95.5, as well as there was one at 94, and I'll show you where that one at 94 comes from. Go to a 15-minute chart for this. But there was an extension that had developed from this previous high. That anchored before we broke out, or even if you use this low here to yesterday's high, that gives us a negative 61 at 95. So there was two targets that lined up there, and in the morning we talked about, okay, breadth was positive 5 to 1. So positive 5 to 1 is a pretty good reading to the upside. And what we've noticed is breadth has significantly actually backed off here, and that's what gave me the whole idea that, okay, well, even though price is going higher, what were ticks doing this morning? And, we had gotten that long in the morning, and I sold out and then trailed, but we had ticks going lower as breadth and price was moving higher. So as ticks started to fail, we were making new low ticks of the day, which tells me there's more sellers than what's appeared here. The market has started to fade off. And you can see that the AD lines, after opening and running all the way up to positive pretty much 1600, we're back below that open on the AD lines. The VIX is right about, the VIX is actually right about to cross through its open here. Ticks, you can see they're trending down, and U-Vol's going nowhere. So all of that to me is actually bearish up here. And it's obviously we're trading on a shorter time frame sequence. What I'm expecting here, and I'm short from 91.5, right? Two contracts. What I'm expecting here is I don't see as much support at the open. When you get an opening drive move, and that opening drive move fails to take the market higher, you see internals weaken. 80 lines at a new low of the day. Let me show you what that looks like. 80 lines at a new low of the day right here. These are the internals that are going to help you, what price isn't telling us internals are, and that is internals continue to fade, ticks put in a new low, lower highs, lower lows. That's divergence, obviously, in price. So once we see us get through, I'm looking for a close on the 15-minute chart below 89 here. And as soon as we get that close below 89, it's going to be an immediate trade back to the open. Light support between 87, and then once we get through that 87, I'm going to look to cover this position at 2084. It's probably going to be the last trade of the day here for me. It's Friday. Things slow down on Friday. We got the holidays coming up next week, so I don't expect a lot of volume. The European close is going to be here in 15 minutes. So this is going to be pretty much my last trade of the day here. We'll see if we can continue. Do need to get through that 89, but we'll check back in about an hour or so, or when those targets complete, and I'm out of this trade. And otherwise, I'm just going to leave this up here. You guys can ask me any questions you have. All right, here. Come on. All right.
Alright, so I just wanted to show you guys basics. That's what my room looks like. I do trade live in front of my traders, and the whole purpose for me is teach a man to fish. He eats for his life. Give a man a fish, he eats for his day. And my room is based around teaching traders how to trade, not necessarily giving signals, although I do show everything I'm doing with the futures. I have a little bit of a challenge going on, but I like to be transparent with my education and my execution. I'm not just sending out signals to your emails. I'm executing right in front of you, showing you why I'm executing, and so you can learn the markets as the way I teach them and trade them. I've traded options and futures before, but now I specifically focus on futures. Kind of have a little bit of an embarrassing story, but I tend to have bigger gains and losses when I trade options. I usually take larger size positions, and my stops usually have to be wider for my risk. I find it very hard to trade options with very tight stops, and I'm able to trade futures on. So that's allowed me two things when I trade options. It allows me to have big gains and big losses, but I also like the tax advantages of futures. Now, I'm not a tax expert, so if you guys are if you guys do not know the tax advantage of futures, just go ahead and Google Section 1256 of the U.S. Tax Code, and that'll tell you everything you need to know. For those of you who are U.S. citizens, you all may not be, but there is definite tax advantages of futures, and you can just Google that tax code if you are curious about that. I also like my students not to be confined by pattern day trading rules. That's another reason I choose to trade and teach futures. Anybody with an account less than $25,000, you can only take 3 day trades on a rolling 5-day period. So by trading futures and teaching futures, I have students who can trade on 5,000 or students who are trading on 500,000, and you're not going to be confined by pattern day trading rules, which I think is really important when somebody is learning trading. Like I said, I'm teaching people how to trade. I'm not just giving out signals on some automated system. My process is completely based on technical analysis and live futures trading. Another reason I like futures trading, going home flat helps me sleep at night and relax in my evenings. Now, I have something a little bit embarrassing at the bottom of my page, but one of the reasons I really started focusing on futures, I had a period of my trading career where I was just taking really, really large positions. And you can see actually on the right-hand side, that is a picture, and I like to be open with people, that is a picture of my biggest loss ever, personally. I'm only 26 years old, and that right there, you're looking at a $105,000 loss in a single day. While that might impress people, I'm not necessarily proud of it. However, my largest gain ever is on the left side, and that is a $200,000 single day profit. Now, obviously, you want your biggest losers to be smaller than your biggest winners, and thankfully, I can say that. But part of the lesson, this was through my growing stage of trading, I had to learn that when you make a lot of money, not to necessarily keep pressing your bets. So, if any of you have been trading for quite a while and know that your biggest losers come after your biggest winners, you can guess which one of these trades occurred first in my trading career. Obviously, I had the winner before the loser, but that's one of the reasons I focus more on futures. Both those trades, profit and loss, were the result of a news event that it came down, resulted in a gap, and me personally freezing in the account. But we all learn when we trade, and that was just a lesson I personally went through a couple of years ago. And part of the reason why I want to talk about why I trade futures. Let's see here. My standard stop size on a futures contract is 2 points, and at over $100,000 per notional value, that's $100 risk on 100 grand. So there's nowhere or no stock that I can currently trade where I can buy $100,000 of the stock and only use a $100 stop. Roughly, for an example, 1,000 shares of Facebook would mean a 10-cent stop. I think it's really hard to trade 1,000 shares of Facebook with the 10-cent stop, but I don't find it hard whatsoever to trade the S&P futures market with a 2-point stop, which would be equivalent to the amount of risk per trade. A tight stop allows me to decrease my risk on my position and increase my reward. And really, what I'm trying to get through all of you guys, if you trade options right now or you just trade stock and you have a hard time either containing losses or finding a valuable strategy, I encourage you to look into the futures market as an alternative way to trade. If you've never traded the futures market, go ahead and start looking into it, because my personal transition from just, I always traded everything, but trading specifically futures has helped me be more consistent in my results, and that's what I want personally for me as a trader. The liquidity and the spreads of the E-mini contract are the tightest in the world of any futures market, which is great. If I'm ever short, I never have to worry about a situation like KBIO. Did anybody here see KBIO last week, where the stock went from $2 to $18 in the after hours? Anybody see that? I mean, it was all over Twitter. I don't know how many of you guys are big on Twitter or just financial news in general, but there was a couple of traders that I had seen that literally had their accounts completely wiped out and had net negative balances of 6 figures in excess. So I never have to worry about that when I'm trading the futures market. That's huge for me. This just that comfort. Now, obviously, that's a black swan event for a stock to go $2 to $18 in the after hours, pretty much on no liquidity and no opportunity to exit. But that's something that'll happen. Black swan events will happen, especially if you trade for a career. Sooner or later, you will be either on the right side of a black swan event or the wrong side. I've been on the right side of one before. I haven't been on the wrong side of one yet. I was on the right side of Goldman Sachs getting charged with fraud. I believe it was in 2010 with put contracts, but that's the only black swan event I've ever been a part of. I want to talk to you, and I'm going to show this to you guys, the biggest level in the S&P right now, and this is where I'm going to get in the educational part of my pitch, and I'm going to start showing you guys some really cool trade setups. The biggest level you need to know right now, for those of you trying to protect your portfolios from that doom, gloom, that crash that everybody always thinks is coming, is 1860. This is what I predicted we would trade in June for my members, and when it traded, if you go back, you can literally look at my Twitter feed, I probably tweeted at everybody in mainstream media that that was going to be a significant low. And I don't know if any of you guys have ever heard of StockTwits, but Howard Lisden, a great guy, I'm sure. But it's funny to show. It goes to show, just because you're a great investor does not necessarily make you a great trader. But everybody was panicking on August 24th. And for those of you who were trading on August 24th, 1860 is the high before breakout, the high of 2007. You can see Howard Lisden, don't be a pig, the panic is long from over, so much damage has been done. And I just responded to him, timestamp, you capitulated on the lows. Those are the lows year to date. The second test of 1860 was on August 25th. The third and final test of 1860 was on September 30th, and the market has been moving straight up ever since. So for those of you guys who have been able to trade this rally and have been on the long side consistently, congratulations, because this has been one of the most profitable, vicious, fast rallies we've seen in the last 5 years. So it's been awesome action to trade from the long side, obviously. So let's talk about what those 1860s are and how they kind of fit into the technical analysis levels that I teach. What you're looking at is a monthly chart of the ES futures contract. So the ES is the futures contract for the S&P 500. It's the most liquid futures contract in the world. There's billions and billions of dollars exchanging hands every single day in this one product. The high of 2007, which is on the left-hand side of my screen, drawn to the high of 2015, had a 50% retracement pullback at 1860. And you can see this is a screenshot I actually took at the time and sent to everybody I knew, because I knew this was such a huge, huge level, and I wanted everybody to know it's a major swing long. And one of the things I like to do to confirm my levels that I'm anticipating 1860 is break them down on the smaller time frame. So what you'll actually see in this slide is a tick chart of that 1860. The blue line on the bottom is that 1860 level, and like I said before, 1860 was the 50% retracement pullback from the breakout of the 2007 high, which was 1586.75, to the 2015 all-time highs at 2134. Okay, so hopefully everybody is understanding that. when you come into big levels, you will see reaction, first touch reaction. I teach this concept to my traders in my room. Big levels will have institutional buyers, hedge funds, mutual funds. Some people even say the Fed buys futures, the Fed saved the dip. I don't know if I don't necessarily subscribe to the conspiracies, but you know, whatever. Somebody with a large size is fine. I knew those 1860s existed, and you can actually see we had that. For those of you who are trading that morning, it's actually very scary. We had a limit down situation coming in the morning. I've never been a part of a limit down situation in my entire life in the ES, so it was pretty crazy to witness. The second test we came in at 1860, there was a 50-point or equivalent to a $5 rally in the SPY coming off of that level in 30 minutes. That is a massive move. That is a big move on the week. That move happened in 30 minutes. The volatility was insane. You could see that second test on August 25th was the low of the day, and we had another 50-point move off of that. That told me there was very large, significant buyers on that level. So just like I was talking about before, guys, 1860, for those of you who are looking to protect your portfolios, if we get below 1860, we very well could see some very heavy selling, because that is an extremely important level that we need to hold, and we did, and we are continuing to go higher. I made a very bold call when that traded. I said those were going to be the lows of the year, and we were going to target much higher. And if you go back on, for those of you on my Twitter feed, go back on my Twitter feed, and you can look at how many people I tweeted at and how many people thought I was an idiot. But usually when everybody thinks you're wrong, that's when you're right. The market moves against the most people and puts the most people in pain as possible, and then continues in the other direction. So this is what we had coming out of it. This is the current sequence of trading events. For those of you guys who trade fibs, I'm about to show you guys probably something you've never seen with Fibonacci drawings. I saw a couple of the presentations before, and I'll see people in a couple of the presenters draw up Fibonacci's, but it almost looks as if they have every single line in a Fibonacci sequence on their screen, which is fine. I believe there is only a few important lines in the Fibonacci sequence, and I'm going to go ahead right here, right now, pull up your charts. I'm going to teach you that. I have no reason to hold any of what I know back, because there's enough money in this market for everybody to make. So, be ready to kind of pay attention to this, because I'm going to show you guys what exactly it is that I look for, and I think is the most consistent pattern on the high time frame, so the hourly and daily, in the S&P futures market, which, to my belief, controls the rest of the prices of the entire market. Every time you come out of a major swing low, you will see a 50% retracement pullback. You're looking at a screenshot of the beginning of the September 30th rally, which was the last time we traded those 1860s. Okay, we came out of those 1860s. We had a 50% retracement pullback. You can see 68-point rally in 48 hours into a swing high. We pull back 50%. We come down to a second test. We dip and then blow out. This is called the negative 23% profit target. We hit a negative 23% profit target, and that was 50 points, and a negative 61.8% profit target that was almost 95 points in less than 48 hours of the last touch. That should tell you that the momentum of the trade is significant to the upside. If you have a 95-point profit target hit in the S&P 500, equivalent to $9.50 in the SPY, hit in 48 hours, you better pay attention to the direction of that trade, because that is where we're going to continue to go. Okay? Now this is where it gets to the educational part. When we come out of a 50% retracement here, normally you only see trading educators, trading teachers draw lows to highs. I'm going to show you guys something different. We're going to go high to high, and I'm going to show you the sequence that we're in, and we've been in ever since that rally coming out of September 30th. This high, which is a 1929.5. So if you go in your S&P chart, I believe that is from October 1st. So the after hours high is 1929.5, and every retracement from that high, there has been a rally. And I'm going to show you guys that right now. So let's look at the first one. That's the high. We pull back 50%. We rally into its target. That's the first time it happened. This is the second time it happened. You see the slight difference in highs. We pulled back, we rallied into a new high, we pulled back 50%, we rallied once again into a new high. I'm going to go to the next slide. At this point in time, we rallied back that same high, that 1928, we pulled back 38%, made a new high, pulled back 38%, continued to make a new high. So you see how it's every time we pull back from this high, we are running into supports. So we had 38% pullback, a 38% pullback. You see it just trading to the tick and rallying up. Let me go to the next one. Once again, that same 1929 half drawn to the next new high here. Okay? Pulled back 38% again. Instantly rip your face off rally. And that's when in those consolidations we're having those new lows. People are getting caught at new lows and the market is going straight up the next day, and that is where the most opportunity comes from. Understanding the high time frame sequence in the S&P 500 is going to let you position yourself on the most profitable pullbacks, okay? Because it really is a fib sequence. In my belief, although I don't have any proof than this other than I've seen it enough times to know that there's institutions, hedge funds, large volume algorithms that trade this specific price pattern and create these moves. I'm not creating these moves. I'm not big enough to create these moves. All of us together aren't big enough to create these moves, but somebody is, and knowing where they exist can drastically increase your decision to enter a trade and profit maximization. So let's go to the next slide here. That is actually the completion of that target. So recently, last Monday, right, the market had sold off all previous week long, okay? And we rallied right coming out of Monday. Guess where we rallied from, guys? That same exact sequence that I just told you worked 5 times previously. This was the 6th time. That high, 1929 half, drawn to the most recent high. Like I said, every time I see somebody draw fibs, they only draw it from a low. They don't know to draw from the high. I know to draw from the high. I teach to draw from the high. I teach you why it works, and I show you why it works. But that high drawn to the high had a 50% retracement pullback. That's exactly where we closed Friday. On the France terrorism news, we had gap down, and this is called the line of defense. That's 61.8. That is the level that can break, or the trend is over. I'm teaching you guys everything I know here. That is the level that can break, okay? We stuck that to the tick and ripped all week long. And our upside targets, so this is my swing target here for those of you who pay attention. When we get up to this 2153 area, be careful because that is a profit-taking spot. Knowing where the profit-taking spots are in these sequences and knowing when the buy points are helps you position all of your positions, because the market will sell off, and every stock will sell off at ES profit targets, and the market will get bid, and every stock will get bid at buy zones. So that's really, really important for me. I am going to now pull up my Thinkorswim chart and specifically show you that. So I'm actually going to, now those are screenshots, and I know screenshots are sometimes hard to see, but I want to show you this on a larger sequence, and so you guys can see this work out right on a live chart. Because, like I said, I don't want to just talk, I want to teach. I want to show you guys what I know so you guys can profit too. We're all in this together. We're all here to make money. One of the interesting patterns here. So this is the high from 2007 drawn to the most recent high that produces that 1860 level. If everybody can see and understand that, the highs of 2007 on the S&P futures chart drawn to the highs of 2015 had a 50% retracement pullback at 1860. Okay, that's where I got that level. You can see actually that in October of 2014 we had a sell-off, right? That sell-off was the same exact pattern, in fact. The highs of 2007 drawn to what was at the time the highs of 2014. We pulled back 50% retracement. The consolidation we had here in 2015, for those of you who traded in the summer months before we broke down, it was absolutely brutal. We were going completely sideways at this previous profit target. You can see how that negative 23% profit target is 21.15 half. Okay, boom, boom. You see all these candle closes, all these touches up at that level. We can't get through it. As soon as we can't get through it, you know, there's some bad news out of China. Same anchor new high. Everybody in my room saw it coming. 1860s traded. We have been ripping up, and for those of you who have, you know, larger time frame profit targets and have IRAs, etc., I'm just going to leave this with you. I mean, whether you want to learn more about my sequence, 2263 right now is the upside profit target of this sequence. So just like those 2115s that were the target from 2014 sell-off in October, the 2015 sell-off is going to target up into 2263. When we get up there, that is my personal profit target and where I think we will see sideways consolidation and an eventual sell-off. You can go ahead and quote me and come back in a year or so when that happens, but we shall see. You could see the violent reaction off these 1860s. This level is not random. This level is a very, very important level for me. And then, like I said, let's go to an hourly chart, and we'll talk about those 1929 extension levels. It's another thing you guys should remember. So, coming out of that last touch, September 29th, 2015, we had that huge rally, 78 points. Your first 50% retracement pullback, trades, goes through its target, and these are all the slides I just showed you. I'm going to go over it live on a chart so it's a little easier to see. Take the high before breakout the high, right? It trades once to target, twice to target, 3 times to target, 4 to target, 5, okay? And see it come into that 38.2, like directly into that level. And then look, what's the next high before we sold off? Right there, within a point of that negative 23% profit target. To me, that is not randomness. These are high volume algos, okay? High volume algos. You can see literally to the tick on the low, to the tick on the high, high volume algo fib. Now we go all the way to that same anchor, new high, okay, all the way up here. And this is what we're looking at right now. France had the terrorism event, another level trades to the tick, 1998 half. That is to the tick on the low, and we've been rallying nonstop all week since that. So just to be aware, like I said, I want to leave you guys with some information. I thought this was an educational webinar, so I'm teaching you guys. We are going to be targeting up into 2152 on the daily swing. You got a negative 61 at 2221. So go ahead and write down those levels. Whether you think they're going to come into play or not, I'll be trading them when they come. You're more than welcome to, obviously trade at your own risk, but I want to show you the sequence that I've seen consistently work in the markets, and just go ahead and give it to you guys. Got nothing holding me back from sharing everything I know about trading, but I'm willing to take some questions now regarding these fib setups, because that is really all I have prepared for the educational part of this webinar, and I'd like to answer any questions. So Reed, if you see any questions that I can answer, we'll go from there. Let's see, questions. Does anybody have any questions regarding this sequence? Reed, you there? Okay, well, I'll go over a couple of, I know a lot of you guys probably trade some of these larger stocks, so one of the things I like to do is every morning I pick a stock to go over. So I'll just go over a couple of stocks. I'll show you guys how I analyze stocks. From the lows of 2009 in Apple to the high, okay, of 2012, we pulled directly into a 50% retracement. If anybody remembers when Apple was getting absolutely annihilated, it was probably, I thought, the best buy of 2013. But that's because I saw this pattern. You can see Apple completed its negative 23% profit target. That low from 2013 to the most recent high actually traded in August 24th. This is right where the market opened, and we have been ripping out of Apple. If you were lucky enough to buy that 94.50, you were up like, I don't know, instantly like 15% that day. But just be aware, if you're an Apple shareholder, I have, based on that measure, an upside profit target at 153.44. Also, if you go to the daily here, one of the interesting patterns I've recognized here is that low from 92 to this most recent high. And once again, guys, just want to show you if it's really important to like incorporate fibs into your levels. But you can see we had pulled back 38% of that move again, right? Pulled back 38%, traded up into that 122.76. So we pull back into the buy zone, we run into the negative 23% target. Then guess what happens? We sell off. So same anchor, new high here. Once again, guys, talked about that 38% being important. That pulled back directly, once again, into the 38% at 111.66. That targets up into, on the daily, a 131.33. So you can see, actually, I already have an alert here. But you know, when it comes to stocks, I do like to trade the larger swing levels. CMG is kind of an interesting one. For those of you who saw CMG on Friday, it got absolutely annihilated. I want to talk about CMG on the monthly and what level I'm waiting for. No, I don't swing stocks too often, but I do like to buy them for long-term investing. CMG in 2012 had a 50% retracement pullback from the 2008 low. You can see that level traded to the tick pretty much on the monthly chart. That's as close as you're going to get. Those targets, the negative 23 and negative 61.8% profit targets, were 538 and 693. You can see the first touch of both those levels had some selling. But what I'm looking for in CMG, and I don't know if it's going to happen, but if it does, I'll tell you what, I'm gonna step in and buy. But that low from 2012 to the 2015 high has a 50% retracement at 496. And that 496 is going to line up with the support here you saw in 2014. So that's what I'm waiting for. I actually set an alert right here. I thought I had an alert set, but maybe it just shows on the daily chart. But that's what I'm waiting for in CMG for that level. So using Fibonacci's and having the patience to wait for pullbacks is crucial, in my opinion, to long-term trading. For those of you who are interested in learning more about my trade room, I hide nothing from my strategy. I teach you guys absolutely everything. Every morning I make a trade plan. So I'm an intraday trader. I sit at my desk every day and I screencast all day long. This is my job. Every day I follow my trade plan live and execute my trades live on a screen. I show you my orders. I teach you while I'm trading. I'm not just sending out signals to your emails. I want to show you what I'm looking at. This is not just I have some secret algorithm and I'm not going to tell you. I'm just going to email you. This is I'm going to show you everything I got trading education room. $7. You will not get better information on the ES futures trading anywhere on the internet. For $7, guys, you can join my room. It's a 14-day trial. You come in my room. You see me trade live. You can ask me any questions about anything I just went over in regards to the Fibonacci trading strategy. How would you trade it on options, futures, etc. The link is right there, majorleaguetrading.com/trial. I will tell you guys right now, if you're willing to spend $7, I mean, you just listen to me for 45 minutes. If you think anything I had to say was worth learning and incorporating into your trading strategy, whether you look at the monthly time frame or the 5-minute time frame, it does not matter. This stuff works on all time frames. There's high volume algorithms attached to these levels, And it took me a long time to figure all this out, to be honest. But fortunately, because I was young when I first started trading, I bought my first stock at 15 and really was hammering out 8 to 10 hours a day in my dorm room studying charts, and that's what led me to kind of come up with all of the analysis I've discovered. I believe I have a little bit of an edge just because I had so much time to learn. Not a lot of people had the time that you get when you're in college and you got downtime. Everyone's at the bars. I'm sitting on a computer. But majorleaguetrading.com/trial, TRIAL, $7 for 14 days, guys. And like I said, you get to see me live, trade every single day. I come up with a trading plan. I share my screen. I share my levels. I share my analysis. Nothing's hidden. We're completely open and transparent with all of that. I encourage you guys all, if you've never traded futures, you've only traded stock, you've only traded options, you've only traded Forex, but you still are struggling, take that leap. Check us out. We'll set you up with a demo account, get you paper trading, whatever it takes. We're really looking to move traders into the next level. But that's really going to conclude the end of my educational webinar on Fibonacci sequences in the high time frame ES. And I'll read, like I said, if there's any questions from any of you guys, that'll be it.
Yeah, sorry about that. I seem to have stepped away when you were asking if there were any questions. Can you not see them coming through on your screen?
No, I cannot. I see the old ones coming through from previous.
Can you scroll all the way down to where it starts to get into your time slot? You should be able to scroll all the way down.
I see the last link you posted in trial for the trial, but I do not see any of the questions coming through. I have the questions thing expanded.
Okay, so you do have that checked. On the view part of the dashboard, that little drop down, can you click on view and make sure that questions is checked?
Okay, view. Okay. Questions is checked, yes.
Okay, so I can actually read you out a couple of them that are coming through right now. Let me just
okay, that works.
They're coming in through here. Okay, so the last one was, what is the price for the trade room after the first 14 days?
After the first 14 days, it is 90. It's about $100 a month. It's 99 a month.
Okay. What determines when you draw high to high or low to high?
So a high to high is determined. Every move, and you'll see, and you can go back and study this in your charts. But every move you'll see will begin in a low to a high, and then if that move blows aggressively out or quickly out of that negative 23% profit target, then I go high to high. So because for me it doesn't have enough, it shouldn't pull back, so it's pulling back from the previous level it broke out rather than where the original accumulation started.
All right, got another one here. Can you apply this Fibonacci in Forex?
Absolutely, you can apply it in Forex. I actually used to strictly trade the 6E in 2000, and I believe it was 2011 with the Euro crisis. I mean, it was my most profitable instrument in the time. So I mean, I've traded it in Forex. I just focus on the ES because I am able to use an internals grid as well.
All right, and so we have a question from Sam. How does this work for novice traders?
For novice traders, so if you've never traded before, we actually have a little bit of a program I'm not talking about in this situation, but what we do is we'll set you up with a demo account. We don't recommend anybody starts trading live just right off the bat. And we'll set you up with everything, with a bunch of videos on the back end of our website you can watch to kind of either set your platform up. We'll set you up with the custom settings I have in my fibs. We'll set you up with my custom grid, and then we'll set you up with a demo account, and then you're able to stop in the room. It's a chat box. I'm broadcasting everyday trading. It's not like we don't have 12 moderators teaching. It's me and my partner, Eric, and we focus on this one strategy because that's really all I need to make money, and so I believe that to be it.
All right, we've got a question from Abdul. He asked, what time do you start and how long is it last daily? So he goes,
okay,
what time do you start?
I start 8, so I'm in Chicago, so I'm Central Time. The room will open about 8 o'clock, between 8:10 to 8:15, I start recording a morning trade plan video. That video is then emailed and tweeted out to our members, and I go all the way till 3 o'clock. I mean, I'll get up for lunch, or if I have an errand to run, I'm away from the desk, but 5 days a week, 8 o'clock to 3 o'clock market close. That's how long the room runs.
Oh, we got a kudos from Mike. He says, best presentation by the youngest and smartest of all the presenters so far. So he seemed to have really enjoyed the presentation.
Awesome. I really appreciate that.
So we have one from Dex asking, do you day and swing trade?
Yeah, I day and swing trade. So it's funny. That 1860 level, I did an interview before where I was talking about day trading, but I pulled the level up from the monthly. My firm belief is that the best swing trades originate on the day time frame. And so every day I'll actually look for what are potential swing entries, but enter on the intraday time frame so I could use a 2-point stop. So every day in my trade plan video, you will see what I have as the potential swing trade entries for the day, and I'll talk about them in the room as they trade as well.
So we have a question from Confidence. His name is Confidence. That's a cool name.
Nice. Cool name.
Yeah, that's pretty good for trading. So how much minimum do I need to trade futures?
Okay, so futures trading accounts, I mean, to be honest, there's futures brokers that'll let you open up with $1,000. I don't think that's realistic. But a futures contract with most brokers, and there's a million different futures brokers out there, and realistically, a futures contract is about $500 on margin on the low end, and all the way up to $1,500. And I know Thinkorswim Chart is $3,500. So if you were to ask for like a complete minimum, I would say a good starting account size, $3,500 to $3,000. However, if you're just looking to learn and don't have that capital yet, you're going to be trading on a demo anyway until you get the hang of it. So if you don't have that capital yet, don't be afraid to come in and learn, because you definitely need to learn how to trade on a paper account before you put your money where your mouth is. At least that's my opinion.
All right, we have a question in regards to the subscription. So can the monthly subscription be canceled at any time?
It can be canceled at any time. I'm not going to hold you down and make you stay. I guarantee you'll like it. So that's why it's $7 for 14 days. If you don't like it, good luck.
All right, and so Ken writes, does this work on crude and what time frame?
Actually, it does work on crude. I could, if you want to take the trial, I could show you. The higher time frames always work the best. When you have high volume moves to either side, that is when you'll see the most technical breakdowns. But yeah, it is actually extremely accurate, especially on the daily time frame in crude.
All right, get one more in here before we have to move on. Do you trade all E-minis?
I broadcast and educate on pretty much all E-minis, but during the intraday time frame, people will be like, hey, what do you think of this stock? And I'll pull it up and just give my analysis and breakdown, but most of my income comes from my E-mini trading. I'll trade, I mean, like I said, I'm a trader. I'll trade anything I like, but I like to specifically focus on the E-minis.